All right. Good morning, everybody. We got a lot on the table. Got a lot of Fed speakers, and we have the Bank of Canada yesterday did a rate decision, and then today their governor is gonna do an announcement, like a prepared speech, and then he's gonna take questions, and that has a high impact probability. We are also going to get some oil information. So normally we'd get that on Wednesday at 10:30 because it's a short week. We're getting it today. And there's going to be Fed speakers through the entire day. So if you're running 0 days, you're just going to want to approach with caution. We see what's going on around the world. Everything that we would normally keep track of is down. Europe is slightly, just barely up, but not enough to register anything. Hong Kong is down the most, 1.75%. When we look at that and think of the, all the stimulus talk and everything that they've been doing, call it subtle or soft, or there's a word for it, I'm missing it. But it wasn't overt, right? Like they're just trying to ease monetary policy, increase liquidity without coming in and just downright making it overt with that stimulus. And so far it hasn't really stuck. Behind Hong Kong, the NASDAQ is down the most, about 0.75%. Then the S&P closer to 0.5%, and then the Russell, then the Dow. So the Dow is basically flat. Think of the Dow holding all of those value plays, right? Those blue chip home names that everybody would recognize, boring, defensive. And of course, I mean, it does have, your big, sexy, what do they call them? The Glorious Seven, Magnificent Seven, the FANG names. But I think we're going to find today is just a continuation of what we've had through most of the week. See that move in pot has finally started to stall out a little bit. That was a pretty significant move in the marijuana space. So inventories on the petroleums, we were kind of talking about that a little bit yesterday. You can go to the EIA website and look at the strategic petroleum reserves, which is basically what the US keeps in their back pocket so that if costs get too big, they can put out barrels of oil to kind of try to be a buffer against short-term spikes and shocks to the system. The problem is they used their reserves and they didn't refill them. Now energy is even more expensive. Crude is at a really high cost and they don't have the reserves to come in and knock that cost down. And in fact, they still need to restock their reserves. And if they do it now, they're going to be buying it at its highest price and just adding to the buying, it's driving the price up. So that's awesome. We're still seeing more about Apple getting banned in China's businesses. That was out yesterday. It's just more of the same today. Now they're moving it into their state firms and state agencies, that same ban. (8:30, 10 o'clock, 11 o'clock, 11:30, and then in the afternoon, all those Fed speakers. We have auctions all over the place, including the 30-year, which, I don't like to pick and choose and say this one's more important than the other one, but the 30-year is a pretty big deal. And then the 10-year note, that's a big one for me. I know that, we're not supposed to have favorites. It's like saying you're not supposed to have favorite children. But, the 10-year, the 30-year, I tend to pay a little more attention to those, right? The 4-week, maybe, not so much. All right, volume this morning in the cumulative volume, it's well within our boundaries. Nothing to see here. Sitting at 103. It's kind of like the Goldilocks thing. It's not too low, it's not too high. It's just about right. So we'll just get that out of the way. We have an MDP. It's a missed daily pivot. And we are underneath the weekly. And this is so far another missed daily pivot, because the pivot we had yesterday, sitting way up here, was never tagged. And the pivot that we had the day before, which is sitting way up here, was never tagged. So we won't look, I mean, we can look, but it doesn't really count. There was one for Monday, but, oh good, it didn't print. So there wasn't one for Monday. And that's good, because we would have ignored it if there was. So we hit Friday's pivot point. We missed Tuesdays. We missed Wednesdays. And so far today, we are missing Thursdays. So what's the significance of a missed pivot? If you go to YouTube and type in missed daily pivot, MDP, you'll find a series of videos by the poor guy, I always forget his name. Anyways, by somebody else other than me, because it's not my strategy. And while I don't trade with the strategy, recognizing that there's a missed pivot or not changes my perspective on the day, right? It's a part of the analysis that I perform. So it's worth learning about. If you don't have enough strategies and you want to learn a new one, that's a decent one to learn. Or if you just want to learn it, even if you're not going to trade it, it's still worth learning. So you want to check that out. But every day this week so far, we've missed that daily pivot. We're still holding that record and looking for that to change. And it shouldn't really be a surprise, because if we look at the weekly chart, that red candle there is this week. We opened and we've done nothing but fall all week. Now, yesterday we crossed through a critical level. We crossed through that 50% mark. So if things were doing good, if this TRB was going to follow through and make it back up to this high and continue to the upside, then we should not have pulled back enough to get below that 50%. And the fact that we did is concerning. So it doesn't negate the entire move yet. If you were just to go in and, apply just some standard basic technical analysis, this pullback doesn't break the longer term move here, right? We would need to break this low way down here and set a new lower low. The thing is, if you go into those books, it'll talk about reversal patterns where you get a pullback and then a high, and you get one of two kinds. You get that pullback that broke this previous low, and then a lower high and then a go. So that's one style. Or you get the one where it pulls back and it sets a lower high, and then it breaks that low, and then it sets that lower high. We're in that one. It's that second one that we need to be concerned with. So when we pull this back up here, we've got a higher low. So all well and good there. But now that we've pulled back from last week, we didn't continue to the upside. We got a lower high. And this is a change event. It's not done yet. So we don't have an answer on, well, we going up, we're going down. If it breaks this low, then we have completed the cycle, and it would be a full-on valid verified reversal. But we would have to get all the way down below 43.50. Now this is a weekly, right? So on the weekly, it doesn't look like it's very far away, but we're talking over 100 points. And then for the continuation, we would have to come back up and break this previous high. So you're talking about, year-to-date highs or 52-week highs, getting above that for this continuation from back in March to continue, right, to be valid. So we're in a changing environment. Those are warnings of a reversal, but not a confirmation of a reversal. So we can see the line here. I've turned the label on. It's the 10-week EMA. We hit it around 4 o'clock this morning, and we tested it again, just broke down through it, and we came back above it. Now that's a classic double bottom bear trap bounce. Just remember the double bottoms are a trap. Double tops are a trap. That's what they're designed to do. And it should look convincing. Otherwise, it's not much of a trap, right? It's got to convince people to short here so that we can trap them and then squeeze them and make this thing pop to the upside. So just kind of keep that in mind when you see the double bottom setting up and you get that little bit of a breakdown, maybe like just a wick down and it comes back up. If it just wicks through and comes back up, that wasn't very convincing at all. Who's going to fall for that trap? It needs to really convince enough bears to jump in there. So it's a nice little example. I like that. But we've got yesterday's low to contend with, even if we do get through that 10-week EMA. And if we do get through that previous day's low, then we've got a voodoo line at 44.35. Then the ADR half, 44.43 is also in there. Right, so kind of put them in order. Previous day's low, ADR half, voodoo line, and then the ADR full, all the way down at 44.17. It's a long ways off. There's really not much there. The previous week's low is just below that at 44.14. Just seen a tweet from President Biden on strategic reserves. I think, let's see. Biden just tweeted his administration is canceling all remaining oil and gas leases issued under the, oh, never mind. That's just talking about the leases. Too early in the morning for trolling on Twitter. Oh my gosh. I hate Twitter. What? No, I mean, Twitter's awesome. Ching ching, yay. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We are through that gap, that shallow area that we had talked about, and the price shelf didn't hold even a little bit for support, but it is acting as a perfect resistance right now. 44.70 is kind of that line in the sand from this price shelf back here. If we continue to test against that area without making it through there, it's very likely going to become the new point of control. But we're a long ways away from that at this point, because the volume that we had printed above 4,500 is still significant, and it's not going to go away anytime soon. Right? We won't even start seeing the candles disappear from that zone until next week sometime, next Wednesday. So, all these lower prints from back here are still in effect. Unless we make some new lower prints, then this is what's our main focus. So just like falling out of the tree from the top and hitting every branch on the way down, this move to the downside is going to be hitting through all these different branches or price shelves. They're not much for support and resistance. We don't look at them as support and resistance. They're just areas of potential impact in the market, right? That we expect price to respond or react at those levels. Potential turning points. Remember, when it comes to support and resistance, most people, including me, say it wrong. We're not supposed to say support and resistance. We're supposed to say potential support and potential resistance. Because until it actually proves itself as support, meaning price went to that spot, was supported and moved away from it, then we can look back and we can say, yep, that was support. But it's a past tense phrase. If we're looking ahead at areas where there could potentially be support or resistance, then we're supposed to use that word. But it's a word that you get tired of saying after about 5 minutes, and you just say it's support and resistance. So just keep that in mind when it's me or anybody else talking about a potential forward support or resistance. It's only a possible potential support and resistance until proven otherwise. We do get some reasonable volume from the area where we opened this morning. So if we do get a drive back to the upside, getting through 4470 is going to be a little tricky. It shouldn't be too hard to remember because it was also yesterday's point of control. Now, I'm not going to carry forward that point of control today because I only carry forward the untouched point of control. That one, we just sat there crisscrossing through that zone, building up even more. So I don't want to put a line there, but say this one down here, that's a VPOC, or this one up here. You can see after we closed for the day, we never went back up there. The next day, we didn't go through that zone. It's a virgin point of control. Yeah, I don't name these things, man. It's not that's not on me. Somebody else named it long ago. So we don't have a VPOC from yesterday, but that area now is an area of concern since after we opened in Globex last night, we spent all that time there building up this price. So we don't have a classic B per se. We don't have it anymore, but earlier this morning, it was a classic B. $44.50 has a lot of significance to it, from gamma structure, CTAs, vol control funds. There's all kinds of things at $44.50. So it's not a surprise that we're really, trying to maintain that level. But I think if we get below yesterday's low, we have the potential for something a little special, a little extra. We all like a little extra. That's not what I'm looking for. Yay. So we can see the 10-year is above that 4.23. It's kind of the monthly level that I had locked out. 4.29 was interacted with yesterday, and we're still kind of holding those highs. Now we're inside day at this point. We're still inside yesterday's range, but yesterday was a really big range. So that's not saying very much at this point. We need this thing to get back down below that 4.23. The problem is, if you go to the 10-year and you look at the monthly, the quarterly, the weekly charts, that thing just looks crazy bullish, right? So in the day-to-day or the short term, we might see some pullbacks a little bit here and there, but man, the 10-year just looks so strong. That's a big problem in the big picture, right? When you really try to consider the ramifications or the implications of the 10-year continuing to go up. Imagine it above 5. Are you kidding? Where would the S&P be at if we had the 10-year above 5? And it's been there before, right? At some point we normalize and we kind of just like we get over it or we deal with it, but not right away. Not even not quickly. So the TLT, it's our bond. Let's just swap that back to a futures product since it'll have more liquidity in the overnight. So we could see the 30-year bond kind of holding those lows from Tuesday, Wednesday, now into Thursday. We could almost snap a ruler on that thing, right? Talk about a line in the sand. I keep thinking of that, that Lord of the Rings where the old man's on the bridge saying, you ain't passing this spot. Well, I mean, let's really hope it ain't passing this spot, right? Because we start to see that get below 118, we got to think about the other side, right? When bonds go down, yields go, there you go, right? And that's the concern. So this thing needs to find some gas somewhere and get to move into the upside, some fuel, some energy, give it a Red Bull or something. Get back above that 119, preferably back into the 122s, 125s. The thing is, if you go out to the daily, the weekly, the monthly, the bonds look like trash, right? And they don't look strong. They don't look healthy. It doesn't look like it's giving us a reversal signal. No support really at all. Not a good key level. It just looks really bad. And it's not looking like it's going to get any better anytime soon. So, we were saying last week the bond bulls need to defend, and so far they suck. They need a little help. And the Dixie, we always talk about the picture of trend, right? Like the textbook definition and glorious examples of trend. And some of the textbooks will tell you, yeah, it's about a 45-degree angle from the left side to the right side, from corner to corner on your chart. And I mean, yeah, look at the Dixie here. From the lower left to the upper right, that is just the textbook definition of trend. That's just amazing. Problem is, it's the Dixie, man. We don't want the Dixie to do that. So, give it an Ambien or something, calm this thing down. We're at 105. We're starting to get into a level of concern. And it's not like some line in the sand that we're going to just draw a line and say, okay, well, at 105.50, all of this is going to happen. It's more of what's the ramifications of a higher dollar, right? Now, granted, this isn't the dollar, right? It's the dollar index, but we all just shortcut and use it as a generic and say the dollar. What's that ramifications of a higher dollar? And how does that cycle through everything else that matters? Borrowing costs, right? We look at the 10-year and we look at interest rates, and now we look at the dollar and we have higher energy too, right? We got energy going out of control, and there's no strategic petroleum release reserves to be released. So they're not going to be able to handle the short-term shocks of a higher cost of fuel. It is a lot like saying alleged. Yeah, that's a word that doesn't get put in a lot. I like that. Try using that with support. Allegedly. it allegedly supported the market. Maybe it was something else and we just think it was that. Yeah, I like that. So Bank of Japan has drawn their line in the sand at 152. They said they will intervene if we get back to that level. And really, we're holding at that August 1998 Bank of Japan intervention level of 147.67. We've been kind of holding around that line. We didn't continue to expand. And now this morning, finally, we're pulling back a little bit. The problem is we pulled back a little bit Wednesday and then it turned right around and went right back up again. So I'm not convinced. We've seen this movie before. It looks like a rerun, right? So we want something new. And right now we don't have that. We want to just watch and wait for something a little more convincing to show up. We do have the expectation that this is going to go down. It's just a matter of when, right? Because Bank of Japan already made it clear they're not going to tolerate it staying at these extremes. There's different ways that you can participate in those FX markets if you don't have an FX account. So like for China, you got FXI, there's FXC, FXY. And as you can see, I mean, the liquidity of if we were talking shares, it's not that liquid, right? It's a gappy bugger. So here we are on, I'm on the wrong chart. I shouldn't be on this chart. Let's go back to a normal chart. Yeah, get over here. So if we look at it on a daily, you can see that it moves as much in the overnight hours as it does during the day. But on the weekly, it's not that bad. The expectation is just like with US dollar Japan getting into that 152 zone, that would be like this, the FXY getting down into that 61.5 zone. Year to date low on this would be that year to date high on US dollar Japan. US dollar Japan going down would be this going up. And this is a product that you can trade, right? This is FXY. So we go in and look at the options on it. It's not fantastic, but it does have options. FXI has weeklies. You earn the right to have weeklies. So when we see the designation of weeklies, we know that this is more liquid than FXY. Now, this is China, not Japan, but US dollar China is very likely going to respond the same way that it's going to respond the same way, right? So if US dollar Japan was to, or Bank of Japan was to intervene and give it a smackdown when we got to that 152, we're very likely going to see the same out of US dollar China. So we could play the FXI or the FXY. On the same idea, if US dollar Japan does get that smackdown and begins moving to the downside, then GLD and SLV and GDX, those precious metals should go to the upside. The more US dollar Japan falls, the more these should rise. So, you know, long plays in those if we get that intervention. So until then, we're kind of on hold, you know, and you can do some iron condors or iron flies or maybe some broken wing butterflies, things like that. Sure, no problem. But you don't really want to try to take those precious metals long yet until we get that intervention or that smackdown. Today, for an example, US dollar Japan is moving to the downside. We saw that. And we're not seeing the immediate reaction here. So this is telling us maybe the move in US dollar Japan isn't to be trusted yet. Now, gold's responding to it a little bit. And, you know, it's pre-market and a lot of these, if we were to look at the gold futures, you know, it probably has a more reaction to it. It's pre-market, the futures are going to get more attention. I mean, it's not wow, but it is going up. Right. And that's the whole idea of having a trade, is that we have an idea or a thesis of what we think price is going to do. So, I mean, there's a play. I know, I get it. That's boring stuff. Let's take a look at what's moving then. K-Web is down the most. That's awesome. So that's the China ADRs. And then the China ETF MCHI is also down behind that, which makes perfect sense. Semiconductors more than 1.25. The FANG collectively down around 1%. Tech down 1%. Emerging markets, which is basically China, down 0.75%. Uranium, which is one of our defenses that have been doing pretty good, also down. Oil and gas exploration. It almost would have been easier just to say, what's up, dude? What's up? Nat gas. That's it. Nat gas and pot. Well, that's a recipe for disaster. GROM went from 32 cents yesterday to $6.90 this morning. That's a fantastic change in price. So I don't even know what to do with that. CBay is up this morning. It's at 16 something, 1681. So we're getting some pretty wild moves in a few things out there. These are not my go-to, right? I'm not a full-time penny stock trader, but I know there's a lot of people that like these. WHLR with a textbook bull pennant. 454 is where it closed yesterday. It's at 922 this morning. That's fantastic, right? We're talking about some just crazy moves. Wheeler real estate no less. Reverse split, post reverse split. See that right there. So we've got pot stocks, utilities. It's not enough yet. It's just barely getting started, but utilities are up a little bit this morning. They need to get at least to a 0.5% before we even want to register them or can consider them at all. Bitcoin's getting a little bit of movement, not enough yet to register, but it's at least looking good. And then everything else is either flat or down. And sure, I mean, pot's not looking that bad this morning, but it still seems to be digesting this really big move. So I would approach that with a little bit of caution if you're looking for, a way to participate in this fantastic move that we had in pot. This move happened because of news, right? And from what I can gather so far, it's not that the news was wrong. It was just maybe a little more optimistic than reality suggests. And if that's true, then buyer's remorse is going to kick in a little bit, and people are kind of going to get tired of bag holding this thing, and they're going to contribute to the selling. But so far, no, this is not a bearish pattern by any means, right? Measure that last big candle, mark that 50% line in the sand, and as long as it's holding above that, then it's still game on to the upside. To be continued. And that's really all you got, right? I mean, there's nothing else out here this morning that is really even worth focusing on. Other than that, a whole lot of econ and some, not even econ, whole lot of speakers and energy. And then Bank of Canada is going to come out chipping teeth. Like, that's a wrap. So approach today with caution. I would not expect a lot of follow through, because you got to kind of ask, what's the catalyst? What's going to bring this up off of the lows? And it really does seem like we're headed back down to that 20-week at 43.85. We are interacting with a 10-period moving average. That's a 10-week moving average, and it's the EMA. So it's the one that we pay attention to. I have the SMA on there in a dotted line because I got tired of adding it and taking it off. So I just left it on there. But the 20 EMA and SMA are both in the same location right now, 43.85. And this is, now that it's below the 50% mark of last week, it's much more likely that we see the low of last week. And if we get that close to the 20, we're probably going to just get to the 20. We are outside of the weekly expected move. Right now, yesterday's low is the line that we want to focus on. And there is this thing that we don't talk about much when it comes to how far outside of the weekly expected move can we get before the algos kick in. And what the algos will do is they'll start selling into selling, because they'll try to get the portfolios back to delta neutral. And when we're on the downside, to get back to delta neutral, they will sell ES futures to get their SPX options trades back to a delta neutral. Futures have a hard delta, options have a soft delta, right? It's a liquid changing delta. So they'll sell into selling, and they'll, of course, when they're selling futures, that makes the market go down. And so then they have to sell more to get to zero, and that makes the market go down, and they have to sell more. It becomes this vicious loop. Same thing for the upside, by the way, but it doesn't happen just as soon as we get outside the box. I mean, to a small degree, I'm sure it does, but when it really kicks in, it's when we're 2 standard deviations away. Now calculating deviations can, just get a little nerdy. So you can cheat and just, just draw the box and set it outside the box. And hear me when I say that that's not truly a 2 standard deviation, right? It's not. But visually, it's good enough, right? Only you Canadian engineers are going to freak out and be okay. So that's around 4,400. And we've only got 2 days left. So let's kind of believe that we're probably not going to go to 4,400 by Friday. Rising tide lifts all boats. So when we when or if we start to turn back to the upside. We want to see it done with more than just the fangs. You can watch the NY fangs by typing in NY fang. You can kind of look at them that way. It only works in regular trading hours. That's not a pre-market tool, but that will represent, you know, the Magnificent Seven. They can do all the work by themselves if the rest of the market is kind of flat or neutral, but they can't lift the market if the rest of the market is going down. Right? That makes sense, hopefully. So we want that rising tide. Everybody be careful, be safe, have a good day. I will see you all tomorrow.